Hello traders, Chris Buss here with Traders Profit Compass with a look at markets on Monday, January 18th, Martin Luther King Jr. holiday. Hope you guys have enjoyed your long weekend. Hopefully found a way to feed your brain, spending some time with friends and family or just relaxing, maybe doing a little exercise, doing some work around the house, whatever. What I want to do is kind of take a deep breath and look at where we're at over the first 2 weeks of January and then heading into the back half of January. We talked about last week the importance of paying attention to how things traded on Friday ahead of the 3-day weekend as a possible sentiment indicator as far as how much risk traders were willing to hold over the 3-day weekend. And Friday was a very uninspiring session. I think you'd agree. Trading down. We'll look at the charts, but, we had a lot of good news. I mean, we had the $1.9 trillion stimulus proposal floated by Biden, which I think is more than what most people had anticipated. Now, we don't know, of course, what is going to get passed, but I'd imagine it's going to be close to that. It may be throttled back a little bit, but all in all, probably pretty close to 1.9 trillion. And we had really good bank earnings, and all the major banks traded down on that news. So heading into the 3-day weekend did not have a risk-on feel to it. Now, the other thing that we need to be concerned about heading into this week is the January OPEX runoff. As you'll recall, on Friday was the January monthly options expiration. And what that means is there are a lot of technical factors within the option market that have rolled off, namely call walls, a location, a strike on the chain where there are a ton of call buying, and also the put walls where there is a ton of put buying. So there's a lot of incentives on options expiration to not let those people get paid. Okay, so with all that having rolled off, now there's a reset. And what often happens after a monthly expiration, there can be an inflection point in markets. So with price more freely able to move coming out of OPEX, we may see some more robust movement here in the next week or so. So we've got to be on guard for that. Now, we've got a lot of earnings coming up. The earnings season kicks off in earnest this week. Now, Friday we had some big banks. Tomorrow we've got Goldman and Bank of America before the bell. So follow up to the big banks that reported on Friday. But we've also got Netflix after the bell tomorrow night, which is often a sentiment indicator for mega cap tech. Now, Wednesday, we've got P&G, Procter & Gamble, Fastenal, and UAL. So we've got consumer with P&G, we've got industrials with Fastenal, and we've got first of the airlines reporting with United. And then we've also got a lot of regional financials beginning to report on Wednesday. Then Thursday, we've got Intel. They have the new CEO that was just announced last week. He may have some interesting comments on the semiconductor space. We've got CSX Railroad, and then PPG, another industrial, Thursday after the bell. And then Friday, we've got Schlumberger, which is always a bellwether for oil services sector. So I think next week we're going to have some decent reads on some various sectors. Consumer, tech, a lot of financials. We should start getting a picture of how the earnings are going to go. Now, and just to keep in mind, it's not just the number, it's the reaction to the number. So there should be, coming in, everybody's reporting, or the pundits are saying, from here to certainly into the second quarter, the comps are going to be relatively easy, but it's the reaction to those beats, if there are in fact beats, that are going to be most meaningful to us. So what I like to do now is take a look at the U.S. dollar and take a look at the 10-year rates before we get into the charts of SPY and the FANG names. So here we've got the U.S. dollar index daily chart. Back when COVID hit last year, started the slide in the dollar. We took a fast leg down. Then we spent 3 or 4 months consolidating, and then in November, we've taken this next leg down. And this has really fueled that reflation trade that has sent commodities racing to the moon, this breakdown in the dollar. Now we've moved from the 94 area. It has bottomed out recently around 89.5, and now we're getting this bounce over the last week or so. Now, what I've done is lay the fibs on top of this move, and you can see, what once was support here around 92 now becomes resistance on the way back up. And you can see that we've taken out the 20. We've got the 50 EMA coming in here around 91. And then we've got this overhead resistance at 92. Now, there's plenty of room here for the dollar to continue its bounce up towards 92. And you can notice on the PPO, what you'll often see is this move back up towards the 0 line and then have it roll over. Now, what's also interesting is that I was looking at some of the positioning reports on the US dollar, and the dollar shorts are at 10-year highs. So they were adding last week to their shorts on this bounce. Now, that's going to be tougher to do if the dollar continues higher. There's the potential for that short squeeze to take it at least up into this area. And if it were to take out 92 and come up to challenge the tap of the 200 EMA from the bottom up here towards 94.5, that would be kind of a game changer. And what you would see as this moves higher, you're going to see commodities and all those commodity names, the Freeports and the BHPs and steel names and, oil. Probably all that stuff comes down. And what I want to do is be ready for that to buy the dip if we in fact get that move and we see the resource names back off. I want to be ready to buy that dip, because I think what's going to happen is there may be this bounce that ultimately rolls over into the back half of Q1 and then resumes its slide in Q2. So we're going to find out here whether this short squeeze proceeds and how strong those shorts really are. And if some of these guys capitulate on their short positions, that'll be even more fuel to the fire for this fib bounce up into 92. and possibly all the way into 94. And keep in mind that a rising dollar is more or less a risk-off factor for stocks. So we may be getting into an area of weakness here if this bounce proceeds. And coincident with that is a bounce in 10-year rates. Starting here at the first of the year, TLT just fell off a cliff and went from 158 to 150. And that coincided with rates going from under 1% up to about 1.2%. And now here too, we're getting a bounce along with the bounce in the dollar. And what I want to watch here is see how high this fib bounce can take us. And it'll probably, this will probably track with the dollar. A rising dollar will probably mean falling rates. So in this zone here between 154 and 155 would be an area where I would expect this to roll over, if not sooner. Now I have a short on TLT. I am in February 151. So my stop is right here at 153. If rates fall and TLT bounces past 153, I'll have to cover and then look to reposition up here, because I think in the end, all this is a Fibonacci bounce, and that rates are in fact going to go higher into 2021, and this is just a reaction bounce off an overextended move. So if we do get a bounce up in here, I think it would be a good place to anchor a short position on TLT. Now let's look at SPY. What I'm going to do is look at the daily charts and the 2-hour charts to kind of look at where we are, big picture, and also get a little granularity on the 2-hour charts. Now Friday, we gapped down and we went down to fill this open gap that we had from last week. And you can see here that we came down to tag the 20 EMA. And that's the first time we've tagged that since back here in the beginning of the new year. So all eyes need to be on the 20 EMA, because if we're to lose that level, you can see that we've got this rising channel here with this trend line that comes in around, let's call it 370. But then we've got the 50 that's coming in here at 363. Bulls definitely want to see this channel hold. If that were to break, then most likely we're going to come down here to this large volume over price bar that comes in at 365. And most likely by that time, the 50 EMA, which is rising, will be right there. And, we can figure on a 50 EMA test. And if you go back, we haven't had a 50 EMA test since back in November, and that's when we got this, slingshot with the vaccine news, which rocketed up off the bottom up here, and we've been above ever since. So pretty soggy trading on Friday with the 20 EMA test. Got to focus in on that level, which is at basically 373.63 on Tuesday, tomorrow, to see if that holds. And then the first line of defense will be the bottom of this channel down at 370. Bulls certainly want to see that hold. Now, keep in mind here that the whole time on this rise, it's been on negative bearish divergence. We had a PPO high way back here, and we've been sliding ever since. And even that has accelerated from early December, where we had a high here, and now even at this most recent high in price, we were at lower levels of momentum. Now RSI has held in there pretty well, but we don't want to see a breakdown below 50 and then move back down to this bearish area. That would normally we'll probably normally see a drop in price if in fact momentum completely rolls over and RSI makes a break down below 50. Then we're looking for more of a more corrective action in price. On the 2-hour, we had been operating in this balance area between 381 and 378. We dropped completely out of that range on Friday. Here was the gap fill down to 374 that we had talked about Thursday and Friday as being on watch for. We got that gap fill. We got a bounce. Came up here towards this 376 level. But you can see momentum has really dropped off. And now RSI is testing this 40 level, which has been support going way back into the December timeframe. So if we were to have a red day tomorrow on Tuesday, that's going to bring this down into the bearish regime and take this bull signal off on RSI, and then we'll have to see where momentum goes. But that would bring us down into this area. We've got some support at 372. We've got a good support level here at 367. And then we've got the daily EMA coming in here at 365. So as far as tomorrow goes on active traders, with active traders, I think your pivot point is 376. I would be leaning bearish on moves below 376, and if price can hold above, I don't have it drawn in here, but we do have a unfilled gap here between Thursday's close and Friday's open right here. We may get a flash higher to fill that, then roll over. So those would be the things that I would be looking for on Tuesday as far as the active trading goes. QQQ, another 20 EMA test right here. We dropped down. We closed above the 20, but we did tag it. I've got an intermediate trend line drawn here off of this November low coming up. So bearish momentum divergence, bearish RSI divergence the whole time. And we really have not been able to get past this 317 level over the last couple of weeks. So tomorrow, any drop down below this trend line would bring price in probably to this 307.50, where we've got this larger volume over price support bar. And then below that, we've got the 50 EMA coming in at around 303. So those are the downside targets I would be looking for on a break of the 20 EMA here at 311.30 is where that's at. Let's look at the 2-hour chart. This shows some pretty interesting levels here. You can see we made 2 runs at filling this unfilled gap up here at 317. We came up here, got rejected, came back down, found support here at 312, made another run at it, failed and rolled over. We came down on Friday to nearly touch the top of this open gap at 310.25 and bounced up and then, finished on the weak side. So notice the momentum rolling over, about to go below the 0 line, and also the RSI back down here at 40, which has been support. If that were to break and then move down below, this nice bullish run will have been negated, and then we'd be in the bearish regime here, having broke 40 and now down below. So for active traders tomorrow, I want to key off at 312. I think as long as 312 holds, there's an opportunity to go higher, but below 312, I think you got to be leaning bearish for at least a $2 move down to 310. And if that were to break, pretty sizable gap here. You got another 250. So there's the potential for a move from 312 down to 307.50, and that's going to be close to a $5 move. That would be a good way to start off the week if you're an active trader. So I would use 312 as your pivot point on any active trades that you may be looking to put on tomorrow. Friday was more or less a doji day for IWM. Now notice it was down $3, which is sizable, 1.5%. But in the whole scope of things, given this move, not a lot. Came down here to tag the 8 EMA, but then held above this support level at 210. What is going to affect IWM the most, in my opinion, is that rising dollar and falling rates. Rising dollar and falling rates. That's going to affect a lot of these value and resource trades that have propelled this move. So if we see, more dollar strength and rates falling, I would anticipate some weakness in IWM, and notice how overbought this has been. Now, we say it all the time, overbought is not a sell signal, because, this has been overbought for a couple of months, but that's been a good overbought, but would give us caution, if we came down here, lost the 8-day, lost this 205, and then coming down here to test the 20. We don't want to just stand idly by and watch all that happen. We probably want to, exit some positions and wait for this thing to restabilize. Maybe it comes down here with some corrective action to test the 20, come down here, possibly even fill that gap. And then you've got a big support area down here towards 195. And that's pretty far away. That's a 5% pullback. Looking at $20 on 200, that's even close to 10% pullback. So let's watch this closely. IWM still is the strength of the market. Not really shown any weakness yet, but if the dollar takes off, that could pose some problems. And I'd be watching for RSI to drop out from above here, and for PPO momentum, if that rolls over here at a high level, that has some room to fall, being so high up on the momentum scale. That could very easily fall off and then roll down. So let's look at the 2 hour. We've had this nice rising channel for the longest time. We dropped out, but then recaptured it right away. I've got a support level here at 210, but then coming down here to 204. If you're a short-term trader, if you're an active trader, and you see price lose 210, I would think that would be a place where you'd want to anchor a short and look for a move down towards 204, where we had these prior lows. I think that could be a relatively fast move down to that level. And I would expect that to hold here initially and get a bounce. So I'd be looking to cover down towards 204 if you got that move, and then reevaluate on any move back towards 204. If that were to break there, then you're coming back here to 200 and to test that gap. So that about sizes up the indexes. I think it's a time to, as I say, pump the brakes a little bit. We've had a great run, a Santa Claus rally coming out of the Christmas holiday that extended into the first couple weeks of January. Now we've had some soggy trading on the back half of last week, trading down on good news. Let's not get overextended and just think this bull run is going to go unabated. We're due for some corrective action. We don't really have any pure sell signals yet, but sentiment's been at extremes. With options rolling off, I want to be a little bit cautious here heading into the week. Now, part of that caution comes from mega cap tech, which has been really, really soft lately. Let's run down the line. And I've got, aside from Tesla, I'm going to be looking at all daily charts here. Facebook, been in this big consolidation range, $30 range. We have rolled over. We were testing the 200. Thursday and Friday, we tested this gap here, which is $10 wide, going down to 235. Friday, we saw a lot of bullish option buying activity down here after this test. We'll see if that plays out, but very weak overall. And Facebook really needs to hold the line right here. If it were to get pinned under the 200 here and come down and fill that gap, then price is going to be on the wrong side of the chart, having lost the 200, and that would make all this up here look like a big topping pattern with, price officially rolling over under the 200. So let's watch that on the balance of this week. And we do have earnings on 127. So we'll see if price gives us any tells into earnings. If it's strong, you can usually infer that if price is strong heading into earnings, that earnings should be good. If not, then, not very often price trades down into earnings that are blowouts. So usually somebody knows something 2 weeks out. So let's watch that. Apple, another weak look. Classic double top look. We had a top here for the stock split, came down, came back up to the same spot and failed, and with bearish momentum divergence here. Had a high in momentum here, and here at the second high, much lower momentum. That's a classic double top look. Now it's come down. I've got this intermediate trend line which failed on Friday, and it looks as though price is setting up to test this 123 area where this top was, where price wrestled with it before, and the 50 EMA coincides. So that's going to be a line of support for Apple bulls that they want to see hold, because a break below 123.5 opens up this 115, and then possibly even all the way down to 107.50, which had been support back here at these other locations. And then we've got a gap down below that has yet to be filled. So we're coming up on an important test. Notice the 200 coming in here at 107.50. We've got Facebook already at the 200. Now we've got Apple coming in on the 50. Let's watch that. Tesla's been the strongest. So I've got this on a 60-minute chart. This to me, this momentum falling, but price staying pretty much stable, is a classic setup for a momentum reset here at 0 and for this to turn up. We'll see if that happens. I've got a consolidation range here between 800 and 880. I could see this coming down to 805, finding support, and then coming back up. If it doesn't, then you're going to come down here to 770 to where this open gap is. And I think Tesla is going to be a very important sentiment indicator for the market at large, not just technology, but the market, because so many people are in the name. They're not going to want to see any kind of breakdown in Tesla. Microsoft, again, not a real good look. We've got a $20 wide balance area that this thing has been in since July. So what is that? 1, 2, 3, 4, 5, 6. Going on 7 months in a $20 range. And now you can see I've got this intermediate trend line drawn, and price broke down from that Thursday and Friday of last week, and now price is below all the moving averages. You can see the 8, the 20, and the 50 above, and now it's coming into this midpoint of the range at 212.50. If price were to break 212.50, in the coming days, I think you're going to see a fast move down to the 200, right down here around 202, 201, come down here. And I think if you're any kind of an active trader, even a swing trader, setting up here, I think you can, if you get that break, if you get a daily close below 212.50, I think you can anchor a short here with your eye on 202. Set a stop just above. I think you're going to get that move, and I think that's one worth shooting for. That's $10. If big cap stays soft and this breaks down from here, I think you're going to get that move. I really like that trade coming down to the bottom half of this range, and then ultimately finding support right here at the 200. So, we got Facebook at the 200, Apple at the 50, and Microsoft set to find the 200 down at 202. Amazon, very much the same kind of idea. Big consolidation range between 29.50 and 32.60. Just been chopping around, doing nothing. Momentum going out of town. RSI, bottom half of the range. Now we've got price testing this 3,100, which is the midpoint of the consolidation range. If you see Amazon lose 3,100, I think you're going to get a move to 3,000, 29.50 in short order for, again, a test of the 200 in that neighborhood down here at 29.50. The 200 is at 29.13. So I would anticipate if 3,100 is lost, that it's going to come down here to the bottom of the box. Again, a very nice swing trade to capture that $100, $150 move. And notice the compression in all the moving averages above. They're all on top of one another, and price is pinned below. So with price below all those moving averages and moving to the bottom half of the box, I think you're going to find the bottom at 29.50 rather quickly. Google, in a little bit better shape than the others, still consolidating, but holding the bottom of the box, holding the 50. I think 1720 to 1700 is the key. I think as long as price can hold above that, the bulls are fine. But on any kind of break below, you've got at least a $50 gap that's yet to be filled. And then once you're on the downhill side below the 50 and filling this $50 gap, then most likely I would anticipate coming down here to again fill this gap and tag the 200. So the way I see it so far is mega cap tech setting up, at least in a position, to make a run to tag their 200 EMAs. Now this one, like I said, is fine above 1700. I think a break below is the point where you want to get short against 1700 with a stop, say at the 50, and then look for a sizable move down in the weeks ahead. Netflix has been trapped in this $90 range for quite some time. You can see it. Now price made a lower high here. Momentum coming out. RSI coming out below the midpoint of the box. I would anticipate this coming down to the 470 area. Now we've got, Netflix is reporting tomorrow, so something probably dramatic is going to happen, and I certainly wouldn't want to be trying to trade that. You're either going to get a gap up or probably a gap down, but after the dust settles, let's see where this falls in relation to the 200 here. And, any break below would not be positive long term. If they have good earnings with a good earnings reaction and pop the top of this box, then it's off to the races if price can clear and hold 560. Then you've got a measured move of $90 going up to 650. That probably wouldn't be my base case given, the softness of all the other names. But that's why we got to watch it. You never know what's going to happen. So anyhow, look for a tell tomorrow on how price trades into the print. Is there strength or is there weakness heading into the bell and earnings afterwards? So I want to be relatively cautious heading into this week. I think there are some very nice pivot points setting up if price were to break lower on these mega cap tech names. We've got a lot of, quite a number of names that I pointed out sitting on critical spots with pretty clear runways lower if it decides to break that way. We'll have to wait and see. But don't get out over your skis on the long side. If you have some long positions, it may be time to either take a little bit of risk off or sell some upside calls that will stabilize your positions heading into this week. And be nimble and flexible. And let's see how the week plays out with earnings ramping up. Let's watch the dollar, 10-year yields, and see if IWM maintains that leadership. And let's watch mega cap tech to see if it can hold it together or it starts to roll over to a larger degree. If you're new to the channel and found the information helpful, why not subscribe and join our team? Hit that alarm bell, hit the subscribe button. You'll never miss any of my content going forward. And then look over in the show notes where you'll find links to the blog site, where you'll find a lot of extra information that never gets covered in the videos, and also a place to register for my content where you'll get everything in a nice neat package in your email box each and every time I publish, and also an invite link to our trading room that has a great group of guys and gals, aspiring traders working hard to improve their trading. A lot of camaraderie and teamwork, a lot of shared ideas. It's really been picking up lately, and it's great to see. So we'd love to have you join the team. I can think of no better place to spend time than in the trading room, picking up these new ideas. And if you're working full time and not available to participate in real time, go ahead and join, and then scroll through the posts after hours at your convenience. You can blast through a whole day's worth of ideas in under an hour and pick up on the threads and pick out the ideas that you may want to explore further. So we've got a lot of people that do that. Not everybody can be involved during market hours. We've got a lot of people that look on the weekends and after hours during the trading week to review those ideas and glean what they can from the posts. So I encourage you to do that. So this has been Chris Buss with Traders Profit Compass. Talk to you next time.